Hi guys, Nathan here from Buyers Club. Welcome back to another market review. Today we're looking at Cessnock in New South Wales, which has emerged as a very strong market in recent history. Cessnock has actually been the fastest growing LGA in the past year, not only in regional New South Wales, but it's also been the fastest growing market across New South Wales as a whole, up at a very impressive 16.52% price growth in the past year, which of course begs the question, can that trajectory continue? Or are we heading for a big correction soon and a big slowdown in growth? Well, if we take a look at the price history here, you can see that this recent growth was preceded by quite a major pullback in late 2022 into 2023. And the angle of the recovery following that decrease has been really strong and impressively quite consistent. If you look at the angle of the line there and just how straight it's been, you can see that the market was really locked into this current level of growth since as far back as late 2023. It was quite a sudden switch back into growth. But if you look further back as well, you can see that there was a previous period where growth was actually faster than it is today, back across 2021, where the slope of the chart there was really incredibly steep. And that period similarly came off the back of a similar dip in prices back in 2019 and carrying right through to mid to late 2020. Pre 2018, though, the level of growth had been extremely stable. Since at least 2010, there hadn't been a single price decline in Cessnock. And if we look at price momentum, we can see this performance over time more clearly. Pre 2018, we had this gradual acceleration in price growth before this slowdown and price decline in 2019. And then Cessnock emerged from that dip with an incredible level of growth, getting up to over 3% growth per month on average, which is a level that many markets have never gotten anywhere close to. Now, more recently, after the last dip that we've seen, which was somewhat deeper than the earlier dip in 2019, growth very quickly settled into a pretty stable level here, which is what we are continuing to see play out in recent figures. And if we look at some key property market metrics, we can see why this growth has been so stable in the short term. Firstly, days on market, which is obviously a huge leading indicator for immediate growth because it tells us how rapidly properties are being taken off the market. You can see that days on market has tightened significantly and has also been very stable at about 30 days on market, which helps to explain why growth has also been so stable in the past year for Cessnock. Secondly, inventory has also been quite stable at about 1 month's worth of listings on the market. From May to November last year, we saw roughly no change in inventory levels, holding steady at that extremely tight level of inventory. And it even briefly dips down toward half a month of inventory heading into 2026, which is quite a rare level for a market to reach. However, if we take a look at vacancy rates, these haven't been as tight as other indicators might have suggested. We've seen about 3% overall of last year, which, taken alongside the level of days on market and inventory, is probably a reflection of slightly elevated investor activity as more properties are converted into rental stock by new investors. But now it's excellent to see that vacancy rates are again tightening towards 2%, which demonstrates that the rental market is actually absorbing this potential increase in investor activity. And if we take a look at sales volume over time relative to sales volumes across the state, it's clear that this is a property market that is growing in prominence and in activity over time. The trend is quite strong here over the long run, and even more recently, we're seeing monthly sales volumes tending more towards exceeding the long-term trend line, which can be a really strong sign of positive sentiment in the market for the short term. Population growth is another key marker that Cessnock is doing very well on. The market has been outperforming population growth across all of New South Wales since 2016. And it is held incredibly stable over that period too, at just over 2% growth a year. Cessnock was also incredibly stable across COVID too, which is very impressive. And the long term trend here is encouraging for aggregate market demand looking ahead. If we look at the fundamental industry composition in Cessnock 2, healthcare is the major source of employment here, almost exactly on par with the statewide benchmarks for healthcare employment. However, notably, mining and manufacturing are somewhat overrepresented, while education and training employment is below the state average. So, this may impact the risk profile here somewhat over the long term, since we know that primary resource dependent industries can be exposed to commodity market shocks or economic cycles. But at the same time, it's worth keeping in mind the size of this market. The population here is already over 60,000 and growing steadily, as we've seen. So we're not talking about a small town that's dependent on one or two industries. And that overall size will help to offer some protection against potential shocks in primary industry linked employment. And of course, this data is a bit out of date now, but we know that household income growth is a very strong predictor of property price growth in the long term. And over the last two censuses, Cessnock's household income growth was fantastic compared to the state benchmark at over 3 percentage points higher. Cessnock recorded 26.85% household income growth across that period compared to just 23.08% for New South Wales. That's it for Cessnock, though. That was some of the highlights from our recent report on this market. Let us know your thoughts in the comments, though. Do you see Cessnock continuing this recent growth? And what do you think about the long term prospects for Cessnock? Could this be a solid buy and hold option for you? Let us know, and we'll see you in the next video. Thanks for watching.